Welcome back, traders and investors. I'm Joel Alcana, and this is Benzinga's pre-market prep brought to you by MarketFi. I am on the line with Tadas Viskanta. He is the founder and editor of Abnormal Returns. How you doing today?
I'm doing great. And yourself?
I'm doing good. So I hope what you mean by abnormal returns is you have abnormally good returns.
Well, I don't know about that. It goes back a long way. So, like anybody who starts a business or a blog, you're looking for a unique name for what you're doing. So, that's what I came up with a long time ago. So,
How come?
hope.
How come? Why did you come up with that kind of name? What did you think it would attract people?
I was really just looking for, kind of terms, financial terms or investment terms that would kind of speak to people. And I literally went through a financial dictionary and just started looking at terms and wrote a bunch down and saw what was, went on to see what URLs were available. So it's really not any more complicated than that.
Okay, and give us a little bit of your education and your background in the markets.
Well, for instance, I've been blogging about finance and investments for over 9 years now. So I've kind of been in the thick of it in terms of the investment blogosphere for some time now, and have been a private investor for longer than that. I have kind of a traditional background when it comes to finance and investments with an MBA and work experience in trading and in investment management. So I've been interested and involved with markets for quite some time now. So it feels to me to be kind of second nature at this point. So.
Tell us about your background in trading.
Well, like anybody else, I had some experience working in a, professional sort of setting in on a trading floor. And in terms of my individual investments, I pretty much traded everything at one point or another. Whether it be stocks, options, futures, and currencies. And like anybody else, I think the one lesson I take away from it. I don't describe myself as a trader today, and I wouldn't describe my background as a trader as anything other than average. I kind of learned early on what my strengths and weaknesses were, and kind of avoided. Maybe lesson number one is kind of keep yourself from blowing up, and I was able to do that. So to that extent possible, I would describe myself as an average trader. But I think that's a great lesson for people kind of as they kind of explore and kind of move through the markets, is that I think everybody has to find their own niche. And there's only so much you can get from books or blogs or shows like this. Eventually you just have to do it, and you have to find what works for you and experience it. And I think the other thing from that is that your interests and your experience kind of change over time. So what you did 10 years ago or 5 years ago may not work for you today, and may not from from a lifestyle perspective, or from any other different sorts of from a time perspective. A lot of people are trying to trade while they have a job, or doing other things. So I think you have to be open to the change that is not only your personal life, but also the markets as well. And I think all you can really do is try and keep educating yourself. And when you do kind of venture into the markets, just kind of make sure that you're not putting yourself in a position where you can't continue to trade the next day. So I think avoiding those blow ups, avoiding putting yourself in a position where you're really taking on too much risk, I think is important from any number of different perspectives.
Wow, you just hit so many good points there. I don't know where to start. But first, you said you worked on the floor. And I assume from looking at your University of Chicago background, did you work out at one of the floors in Chicago? And if
No,
so,
I worked on a trading floor for what was then a pretty big bank. So I was involved in kind of peripherally involved in forex and interest rate swaps. So that was kind of my experience in terms of dealing, being in a kind of a professional sort of trading environment.
and how what are your strengths and your weaknesses that you found out from that trading experience?
Well, I think when it comes to, I think a couple of things. One is you can always learn more. I mean, I think there's, like you said, the markets are dynamic and things that work today don't necessarily work tomorrow. So I think being open to the possibility of change is important. I think, I've written about and other people have written about the worst thing that can happen to somebody who comes to the markets is having a big win initially. And that kind of puts you kind of gives people the impetus to think that they know what they're doing and that they have some sort of key to the markets. And I think, that's where somebody can kind of get set in their ways and start, have a system or have some sort of process that works initially, and that they think is going to keep working forever. And in fact, that's almost never the case. And I think from that perspective, sometimes starting off with some tougher times and learning how to deal with that and learning how to survive, I think is important. So I think that's an important lesson. I think the other thing is as we talked about earlier, I think finding what works for you is really important. I think anybody who has the favorite book. Last week I was out at StockTober Fest and was listening to Jack Schwager talk, who's the author of the Market Wizards books. And I think one of the important things from that is learning that people invest and trade in all sorts of different ways, and what works for one person doesn't work for the other. And I think it's really important to try and find what works for you. And like I said, that doesn't necessarily have to be set in stone. The markets change, and we change over time as well. But I think finding what works for you, and I think the only way you can do that is really by doing it. I mean, I think there's no way to kind of look at a list of different strategies or markets or processes and think, oh, I'm going to find the one thing that works for me right off the bat. So I think it's a lot of trial and error, and being willing to embrace that challenge of trial and error, I think, is important.
Great point. Yeah, so I see you are affiliated with StockTwits there, and you were out at StockTober Fest. Did you get to meet any of the Benzinga crew?
I did. I met Kyle, and we had talked before on the phone, and so it was nice to meet him in person. Yeah, the Benzinga guys were flying the flag there. So
Okay, all right. And any highlights from Stocktober? Is this your first time going to Stocktoberfest?
it was my first time. It's a really interesting environment. I think most conferences are really kind of focused on one specific aspect of investing or markets. And I think the nice thing about Stocktoberfest is that you really get a broad cross section of what's going on, not only in the financial markets, but also what's going on with private companies and fintech companies that are really kind of changing the way that we're going to invest and interact with financial institutions going forward. So I think from that perspective, it's a really kind of a intellectually curious sort of environment, and I would recommend it to anybody kind of on a going forward basis who's interested in kind of this intersection of markets and the startup world.
Okay, let's talk about your blog, Abnormal Returns. Uh, Tell us why you started it and what you hope to accomplish by it.
Well, I started a long time ago, so thinking back about it, I had always had, like I said, I've always had an interest in the markets, and over time, in my professional career, I acquired an interest in writing as well, and at one point had written a book proposal about the hedge fund world, and which was quite unsuccessful in my attempt to bring it to market. So. I had an itch to scratch writing wise, and at that time the investment blogosphere was nascent and was just kind of getting started. So I thought it was a good opportunity for me to kind of jump in there and put something out into the world. And I guess again, going back to the idea of talking about trial and error, I thought when I first started blogging I was gonna be a really kind of fast and dynamic blogger and write a bunch of stuff every day. And quite quickly, I realized that there are a lot of other people doing the exact same thing. And for me, it was kind of the challenge or the process was really kind of finding my niche. And finding my niche was, really kind of being an aggregator for what other people were doing, and where appropriate, applying some of my insights into the markets, and in reference to what other people were talking about. There's a lot of great writers out there, and it didn't make a whole lot of sense for me, or frankly for other people, to just write what other people are writing. I mean, I think unless you have something to say in either a unique voice, or faster, or better, I think it's oftentimes just better to say, hey, somebody else over here has already written this. I agree with it, or I agree with it or disagree with it with a twist. I think that's far more valuable than trying to put out content that is duplicative in some sense.
Okay, so tell us about your investment approach, philosophy, time frame. How do you make your investment decisions?
Well, I think, talking, one of the things we touched on earlier is that we all kind of go through an evolution. And as I've gotten older, um, being an active trader and being somebody who is intensely focused on short-term movements has kind of lost some of its interest and luster. So over time, I've become a much somebody with a much longer time horizon. And so from a certain perspective, that's worked out, for me, from a time perspective and from an interest perspective. So the things that I focus on now are really kind of long-term trends and strategies that I think that have some potential to provide some outperformance over time. But I think, like everybody else, I recognize that expensive, time is a kind of a precious resource, and you should be spending your time on things that not only do you find interesting, but which you also have some edge in as well. So I've kind of recognized over time that where my interests and where my edge might lie, and it's not necessarily in trying to predict what the jobs report is going to be tomorrow, and trying to trade off of that. So.
Are you a fan of technical analysis at all?
I think what depends on how you define technical analysis. I think taking a quantitative approach to the markets and applying that to the markets, I think, is really interesting. And I think that's the direction that, kind of broadly speaking, what technical analysis is. And I think one of the things that has become, computing power now is cheap and easy. And I think what we can do is test what anybody who is really interested in the markets can do is really test their intuitions on what's going on. And you can really put your ideas to the test before you ever put them into the market. So I think that's really important for people to do. I think intuition is important, but I think you also have to take that intuition and apply a kind of a rigorous overlay to that. And I think that's where I think technical analysis gets interesting. I think so. From that perspective, I think that's one of the great things about what's happening in online now, is that we have so many different opportunities to find our own niche, and the tools to do that are so much more powerful now than they used to be. I think anybody who is kind of flying by the seat of their pants today is really going to be at a disadvantage to those people who are really taking a kind of a more systematic and a more rigorous approach to the markets.
So do you look at charts every day? I mean, do you look at different equities or indexes, decide that you want to take a position, and then go to the charts? Really, how much does it play into your day to day role of analyzing the markets?
It doesn't play that big a role. I mean, I think like anybody else who's, I'm a middle-aged guy, so I've been looking at charts for a long time. So, it's always interesting to me to see how, to me, when I look at a chart, what I try to pull from that is really what um, kind of the emotional temperature of what's going on. Specific patterns or things like that aren't things that really interest me. I'm really interested in seeing what uh, how market participants, how that's all playing out in terms of price. So when I look at things, I'm not really looking for patterns. I'm really trying to take the temperature of the market, or markets, as it were.
Okay, so what are you thinking about the market up here now? I mean, that crate. Well, first let me ask you about how are you doing there in the middle of October during the Ebola hype? Did it shake you out of some positions? Did it allow you to get in some new ones? How did you approach that? Boy, there was a lot of hype in the market, and you had people making some pretty big investment decisions. Were you able to stay with your course of study?
I was largely able to stay with my course of study and layer on some stuff as things went down. So that was a an interesting period. I think it's a great point that you bring up. October was kind of a great litmus test for anybody who is involved in the markets. If you viewed October as an opportunity, I think that's one thing. But I think for a lot of people, like you said, they got shook out of positions that they may have had, and uh, you know, uh, a 10% or so correction isn't that it's not an unusual occurrence, especially coming from all-time highs. So I think if you were someone who panicked during the month or got shook out of positions, what you really shouldn't have, I think it's really a great opportunity to kind of revisit your strategy and kind of take your own emotional temperature and see where and how it is that you came out on November 1st, as it were. I mean, I think that what happened is pretty is not unusual in a certain sense. 10% corrections happen all the time, but a V sort of pattern like that is unusual. And I think that is kind of a highly emotional sort of thing. So, if you got freaked out during that, either on the way down or on the way up, I mean, it's something to it allows you to kind of take a step back and see how it is that you came to this point. So, I think October, from that perspective, was really interesting. Most of the year things were just kind of grinding higher, except for the small caps. So I think October was really interesting from that perspective.
Okay, and looking forward for the markets. We just hit a new all-time high in pre-market trading at 2026.75 here on the heels of some Draghi speak. What's your short-term outlook for the market?
I have no idea. I
Good.
mean, I think I really don't. I mean, I think that's one thing that I have come to recognize over time is that I really don't know what the market's going to do over any short or medium or even long-term horizon. I think that, and so from that perspective, I don't spend a lot of time thinking about it.
Okay, all right. We've had Tadas Viskanta on the line with us. He is a founder and editor of Abnormal Returns. You should check out his blog. His blog. Thanks for coming on and really an honest outlook at the markets, and we hope to have you on again.
That would be great. We'll talk to you later.